Okay, this week's market outlook. So, obviously, coming from last week, the main event being NFP unexpectedly fell to minus 23,000 against the expectation for an 85,000 gain. While May and June were also revised down by a combined 103,000 jobs, and wage growth obviously slowed. As a result, September Fed hike odds fell to around 42%, previously from 68%. However, what's interesting is how equities responded far more cautiously than the dollar or precious metals as well. And this is due to the heavy downward revisions raising actual growth concerns within the US. So even though rates are falling, that's obviously great for equities, but like serious growth concerns is obviously not good for equity. So that's why the reaction has been kind of a bit more muted on ES and NQ, on the higher time frames at least. Regarding the Middle East, short end yields have been on a downward trajectory for the majority of the week as markets begin to price in a potential de-escalatory deal. We haven't got it yet, but that's clearly that's where we're moving. Data-wise, next week we'll go over the calendar, but the main events are the RBA, US CPI, UK GDP, and then US PPI, which I believe is on Thursday or Friday. And I think the theme for the week ahead is essentially going to be driven by lower US yields and equities remaining very stable. So yeah, let's get into the calendar. So as you can see here, Monday is pretty quiet. We've got some yellow folder yen news, nothing major. Obviously Tuesday we then have the RBA as mentioned, which is it's a consensus rate hold, and I believe some institutions are leaning towards a more of a hawkish hold, for now at least. Wednesday we then have CPI out of the US, which is going to be key, and as you can see here, consensus is 10 basis points lower than the previous reading, so it's basically supporting the lower yield story for now. Thursday we have GDP out of the UK, which is expected to slip back into negative territory on the month-on-month. And then we also have Q on Q, which is expected to fall 20 basis points. And then I believe... Oh no, it's on Thursday as well. PPI, which is expected to kind of hold in the US. Friday, I believe we have retail sales out of the US, and that is it. Yeah, that's kind of it. So yeah, mixed week. And yeah, let's get into the currencies. So starting with the US dollar, we are bearish this week. I mean, last week's NFP print, as well as the de-escalation coming out of the Middle East, has definitely pivoted our initial long dollar call from last week. And with CPI this week forecasted to come in softer than last month's reading, which reinforces the downward trajectory of the short end. And then if we assume we're going to get a deal to reopen the shelf and moves, which is kind of what equities and the short end is also telling us, and obviously US oil prices, that can all feed into obviously lower gasoline prices, and then keeping the disinflation trend in place through to year end and beyond, which should continue to pressure the US dollar. I mean, if we look at what the institutions are saying around the US dollar, we can see that I believe it was ANZ. Well, ING are short of the print, so are Goldman Sachs, and ANZ are actually long, are they? Yeah, ANZ are negative on the pound, and they prefer to pair up against the dollar. So, but then they like NZD dollar upside. So they're kind of, I'm not going to say neutral, but it's very cross-dependent for ANZ when it comes to the dollar. So yeah, we're bearish this week, and let's move on to the pound. So we are bearish on the pound this week. I mean, softer US oil prices from de-escalation being priced in should put pressure on the UK's short end, and then couple in the dovish Bank of England meeting that happened around a week or two ago. And then also the weak labour market / growth, which is forecasted for this week, that's obviously going to get priced in. With subdued inflation, and we can expect to see the pound get hit this week. The carry appeal from the UK is also going to diminish slightly as US yields start to take a hit, which could see some carry trades unwinding, which will also harm the sterling. What I mean by that is, for instance, pound Swiss upside has been lovely because you're buying the higher yielder, selling the lower yielder. And basically, when yields start to fall, we can then start to see that kind of unwind, so profits being taken, which is obviously then going to lead to pound Swiss moving to the downside. Obviously, I'm not really looking to trade pound Swiss this week, which we'll go over when we talk about the Swiss franc, but that's just kind of what the carry trade unwinding means. Regarding the calendar, as we've seen, we have GDP on Thursday, which is forecasted to slip into the negative territory, being minus 0.1%. And yeah, I think the best crosses will be the high beta pairs this week. So GA, GN, downside. And yeah, institutionally, if we look at what they're saying, I believe A and Z are bearish. Yep. And so are Goldman Sachs. Yeah. So we are bearish on the pound this week, and I think, yeah, GAGN are probably the cleanest crosses. You could take Euro Pound as well, which I've been taking a bit of advantage of last week. So yeah, those are the three main pairs I'll be trading this week with the pound. You don't want to cross it against something like the dollar, which is weak as well. It's just kind of pointless when there's so many other pairs out there. But yeah, moving on to the euro. So yeah, with the euro, we are dependent on the cross as we usually are. Similarly to the sterling, softer US oil prices from de-escalation being priced in should put pressure on the short end, and therefore we could see euro downside against the Antipodeans, whose short end is less receptive to US oil's price moves. Or I should say, the short end in Australia and New Zealand is holding up a lot better than Europe following the de-escalation narratives get priced in slightly. Whereas with Euro Swiss, upside makes sense at the moment as the franc has disconnected from its gold couple, or link, we should say. So yeah, that is the euro. Moving on to the CAD. So we are neutral on the CAD this week. I mean, Canada's short end remains extremely elevated, especially after last week's very strong labour market print, which saw the unemployment rate fall 10 basis points and the employment change jump up to 75,000 for the month of July, which is very, very good. The one drawback will of course be US oil prices taking a hit from the de-escalation narrative. However, for now, that is not driving the CAD, and I think dollar CAD and GCAD makes sense for downside, whilst CAD Swiss upside makes sense. So yeah, those are the three crosses I'm looking for the CAD. Moving on to the Australian dollar. So we're bullish on the AUD and NZD. We'll do them both together because it's a pretty similar narrative. But essentially, equities, as we know, have had a lovely rebound following last week's de-escalation rhetoric. And then with commodities like copper bouncing back, as well as the Chinese yuan obliterating the dollar, we can expect to see strength in both the AUD and NZD. The short end in both these countries is also receiving a nice push to the upside, which will support them on rate differentials. And then institutionally, ANZ are long on the NZD and AUD, both against the dollar. And then data-wise, next week we have the RBA on Tuesday, which is a consensus hold. Obviously, that's going to be very pivotal in deciphering whether markets are going to continue to run with the sort of... Well, I'd say they're kind of neutral at the moment, the markets. The market is really waiting on more clarity from the RBA. And data's been a bit more on the softer side this month, so maybe we could see a dovish tilt. But, I mean, it's a toss-up. You don't want to be gambling on the central bank decision, that's for sure. Yen, we're leaving. I mean, the intervention risk is so clear. They've clearly intervened, and you don't really want to get caught on the other side of it. So, finally moving on to the Swiss franc. We are bearish. I mean, the Swiss franc is an odd one this week. You would have thought that with yields starting to fall from last week and commodities such as gold having a nice rebound because of NFP, we would have seen the Swiss franc also catch a bid. However, that's clearly not the case. I mean, G Swiss, AED Swiss, even Euro Swiss are still at almost, they're about to reach December highs, I believe. And instead we are seeing Swiss weakness across the board. So one reason for this could simply be the carry trade still being popular, even with the US 2s starting to take a bit of a hit. That's one narrative which I could see. Or it could be due to the short end in Switzerland actually getting hit quite a bit on the crosses. So, I mean, until the driver changes, and obviously we'll be able to notice that, maybe as soon as short end yields reach below 4%, we'll start to see carry trades unwind. Then we'll get on the long Swiss narrative, but for now we are bearish. So yeah, that is all the macro this week. Now let's get into the technicals. So starting with the US dollar, we are bearish. I think this 100 handle here is going to be very key. I like downside from there. Now the pairs. So dollar CAD, I think, will probably reject off the 1.4, if not the 1.3975. I don't see us retracing the whole NFP print. So I mean, if we just go it slap bang in the middle here, 3.975. This is definitely a level I could see getting hit. One of these, maybe in between even. I mean, if we get the fib, I don't normally use the fib, but yeah, that'll make sense for a bounce, at least to the downside. NZD dollar, I think this level's super strong and makes sense for a further upside. I believe There are some... no, it wasn't NZD dollar. NZD Swiss, was it? No. NZD Swiss, I think, upside from the 475 makes a lot of sense. GN, downside makes sense. You've got a nice monthly low down here, which if you want to hold it for that long, I mean, you can get in a lovely position. You can afford to have a bit of a wider stop as well. Targeting the monthly lows are there. So we see 1 to 5. GA, exact same thesis. You've got a nice monthly low there. Euro dollar, I like upside from here, just below the 1525. Euro NZD, similar to GN, same with the euro. Oh no, euro pound, lovely weekly high here, and I think rate differentials have decoupled so much that it would make sense for upside here off the 855. Euro AUD, just below the 164. I think this level makes sense. Have the stop covering the 164, and you can be targeting July lows. Euro Swiss upside from the 9325, or just below it, I should say. CAD Swiss as well. $80. I doubt we'll get down there. We're probably gonna have to get the fib out and use key levels. Something like, yeah, the 705 looks pretty enticing. AD Swiss, same thesis. And that's it. This is obviously ES. I never got in this, unfortunately, because it kind of just ran. But this level we called out in the breakdown 2 weeks ago. Must have been 2 weeks ago. Has been playing out lovely. So yeah, that is the outlook this week. As always, drop a comment, leave a like, and we'll catch you in the next one.